12th of June, SpaceX, which was founded in 2022 by Elon Musk by $100 million of his own money and a dream to colonize Mars, went public on Nasdaq under the ticker SPCX, of targeted valuation of $1.77 trillion and raising $75 billion in a single day. That makes it the largest initial public offering in stock market history. It's more than 3 times the size of the previous record. And if you've been following news and you don't actually understand what's going on, this video is for you. Today we're gonna break down how the stock market actually works, what is IPO and why companies actually do it, how stocks get valued and where is the valuation coming from, what's the difference between public and private companies, and voting and public shares. Now let's get into it. Let's start at the very beginning. A stock is simply a unit of a company. When a company issues stocks, it's basically dividing itself into million pieces, sometimes even billion. Buy one of those slices and you own a part of the business. Here is a very important part. The price you see for the stock is completely not random. It depends what people think about the company valuation, and either they think it's too high or too low. And these buying or selling decisions are mainly made because of the valuation. But first, let's talk about how companies actually get into the stock market. So what is IPO? IPO stands for Initial Public Offering. It's the moment when the private company, which was not available for generic public, decides to open its doors to outside investors for the first time. Here is what this process actually looks like. First, the company files what's called S1 with the Securities and Exchange Commission. This document discloses financials, risks, how the business works, who controls it, and how they plan to spend the money raised. SpaceX, for example, filed their S1 on May 20th in this year. Before that, almost no one outside the company have seen those numbers. So now let's talk about the company valuation. Where is this coming from? When people hear $1.77 trillion valuation, they don't really understand where this number came from. A company valuation is basically what the market, or in case of a private company, small group of investors, collectively agrees it's worth at a given point. It's basically part math, part narrative, and part psychology. And the thing is that it can change dramatically overnight. So where does the IPO price actually coming from? Here is the process behind $135 number. Once SpaceX filed S1, the underwriters like Goldman Sachs, Bank of America, JP Morgan or Morgan Stanley started doing what's called price discovery. They took the company finances, they ran into models, they built a valuation range, then they tested this range against actual institutional investors, asking essentially at what price would you buy and how much. This process tells us 2 things. The first, whether demand exists. And the second, where the price should be set in order to raise enough funds without leaving so much on the table. Now let's dive deeper into the difference between public and private companies. Before SpaceX IPO, it was the most valuable private company in the world, valued at $800 billion in late 2025. And here are the key differences between private and public companies. First is ownership. A public company's shares trade on exchange. Anyone with a brokerage account can get a piece of those. Private company shares are only available to private investors, or the shares can be offered directly. Transparency. Public companies must file financial statements quarterly to Securities Exchange Commission, and private companies don't have to share the information publicly. Next is regulation. Once public, a company is subject to stock exchange listing requirements, Securities Exchange Commission oversight, and strict rules around insider trading and communication. Private companies have far more flexibility. Now let's talk about shares. SpaceX is using dual-class share structure, and here is how it works. Public investors get Class A shares. Each one of them carries 1 vote. Musk and key insiders hold Class B shares, and each one carries 10 votes. That 10-to-1 advantage means that despite Musk owning roughly 42% of company shares, he controls approximately 82% of voting shares. It means that he has the full voting power even after the IPO. In practice, it means that public shareholders have basically no influence over SpaceX decisions. So what's the takeaway here? The stock market is basically the mechanism for pricing belief about the future. Every price you see is millions of people collectively deciding what company is worth, based on its fundamentals, growth history, and risk involved. And speaking of trading stocks, if you have been thinking about getting your skills tested in a professional environment, the Trading Pit offers stock challenges. You can prove your skills in real US equities, including SpaceX from day one, with funded accounts starting from €99 and up to $50,000 in virtual capital. And you keep up to 70% of your profits. Check the link in the description, and happy trading to all of you.